And it's the final trading day for the week. It's time to do 55 minutes of business right here on Business Incorporated. Here's what we have for you on the program. There are talks of power plant sale in Nigeria and some controversies brewing around that. Still in Nigeria, the trends and growth of the country's insurance industry. And in Ghana, Africans may be able to attend or visit Ghana without visa from December. Good afternoon, welcome to Business Incorporated. I'm Ini John McQuarrie. Let's have this final one before we head into the weekend, beginning with what's going on in the global grain space. Chicago corn, soybean, and wheat futures were little changed on Thursday, consolidating near 2-week highs as participants assess South American crop weather and await U.S. export data and macroeconomic news for further direction. Corn and soybeans have recovered from multi-year lows this month, while wheat has pulled away from a 7-week low on renewed concerns over dry weather in South America and as investment funds cover some of their large short positions. The most active corn contract on the Chicago Board of Trade was down a marginal 0.06% at $4.52 a bushel after equally Wednesday's close to 2-week peak. Soybean edged up 0.04% to $12.40 for 3/4 of a bushel after hitting a 2-week high. Wheat gained 0.1% to $6.11 for half a bushel after touching a 2.5-week high. Investors are bracing for European Central Bank interest rate announcement and U.S. growth figures, which were released yesterday. For global oil now, prices eased after rising to their highest since December in the previous session, but were set for their biggest weekly gain since October as positive U.S. economic growth and signs of Chinese stimulus boosted fuel demand sentiment. Brent crude futures went down 0.46% to $82.05 a barrel, while U.S. West Texas Intermediate crude also dropped 50 cents, that's about 0.65%, to $76.86 a barrel. Demand sentiment improved after data on Thursday showed that economy of the United States, which is the world's biggest oil consumer, expanded more than expected in the fourth quarter of 2023. Prices slipped somewhat on Friday on signs that oil supply disruptions in the Red Sea may ease as China is pressuring Iran to curb attacks on shipping in the waters of Yemen by the Iranian-aligned Houthi militia. The group started in retaliation to Israel's Gaza attacks. Chinese officials have asked the Iranian counterpart to help rein in the attacks for risk harming business relations with Beijing. However, the Houthis are vowing to continue targeting ships linked to Israel until aid reaches Palestinians in Gaza, and that's according to the group's leader. Back in Nigeria, Lagos State has emerged one of the top 50 cities in the world for tourist destination in 2024. According to a report by renowned publisher of city guides, Time Out magazine, Nigeria's commercial capital ranked number 19, just ahead of Amsterdam, beating other tourist destinations such as Singapore, Miami, and Dubai, which ranked 22nd, 23rd, and 28th. According to the list, the criteria for Lagos ranking in the top 20 considered various factors such as food quality, affordability, cultural richness, vibrant nightlife, historic sites, community vibes, and overall feel of the city. I bet a lot of Nigerians would not really consider Lagos, but there you go. It's an international one, so kudos to Lagos State. Now, about 5.5 million people in West Africa, including Nigeria, are food insecure, and that's because of conflict as well as post harvest losses. The country's Nigeria's representative in the Food and Agriculture Organization, Mr. Dominic Kofi Kauko, who was a guest on Business Morning earlier today, believes that embracing agro-food system transformation would go a long way to curb food insecurity on the continent.
If I come to Nigeria, we are around 1.7 to 2 million of displaced people because of the conflict. And that is very difficult. Today, we have some conflict that they affect more than 10 years that we have a conflict. So they are like 10 years that the farmers and the breeders, they cannot farm. In Nigeria, I think that we are between 50 and 60% of the food lost. Can you imagine? It's too much. From the production to the processing until that arrives to the market. That's why today we talk about agro-food system transformative. That's why we need to have a holistic approach, not from the farm to the plate, but to the plate to the farm. It's what we need to have now. So we need to focus on the post-harvest losses. Why? Because at least if you succeed to reduce by 50% the post-harvest losses, at least we can save or we can feed more people. That is one. Secondly, we need to add more added value on what you produce. We need to work on how we can process, how we can add. Going to have the final product that we can give straight to the people, to eat. So for me, this is what we need to work on all from the productions until the final product. That's why we are now focused on agro food system transformative now.
All right, so from food security, we talk about power. The federal government of Nigeria, through the Bureau of Public Enterprises, is carrying out transactions for the sale of 5 power plants under the National Integrated Power Project at a cost of about $1.15 billion. And although sources familiar with the development explain that the cost of the plants should exceed $5 billion based on international benchmark, and they revealed that the BPE was planning to sell the facilities at a price that is just a little above $1.1 billion. Let's weigh in on this with Professor of Energy and Electricity Law, Professor Yemi Oke, will joins us from Canada. It's good morning to you, Prof, even though it's afternoon right here.
Thank you very much. It's actually morning in Edmonton here, and afternoon Nigerians back home.
Sure. So let's just get right into this. The sale of the power plant is on one side, the costs is another. Why do you think we are even talking about the difference in the price? Is it that the federal government is trying to attract investment or attract buyers in this case? Is that why? Or perhaps it's just a notion. The 1.15 is good enough price for the 5 power plants?
Thank you for the question. This is how I look at it. One, is it that the federal government is desperately in need of funds and they are in a hurry to sell off those assets? I would say yes, and I would say no. Of course, the federal government is in need of funds, and one of the options would be to sell off assets that are not doing well, as against putting more money in it. As I've said several times, federal government, unfortunately, has been spending much more in a supposedly privatized power sector, and that's not healthy for the country, a country in a hurry for development. So federal government needs money. Having resolved that, would that warrant you selling those better assets at a giveaway price or giveaway prices? The answer is no. Just like the privatization of the power entity itself, we felt the government was a bit in haste. The answer is federal government should privatize, to sell off some of those NIPPs, no doubt. but when and at what cost? Government should tarry a bit. Let's look at before the end of this year or early next year will be a good time to really sell off those assets. One, of course, the amount offered is a bit ridiculous, and I will have expected government grossing in like $3.5 to $4 billion. I'm not also going to go with the figures of $1.5 billion, which is allegedly offered for those assets. But we are talking of the asset now, we're talking of the 5 power plants under NIPP. We're talking of Beregu, which is vital and viable. We're talking of Olorun Shogo. We are talking of Omotosho. We're talking of Benin Hiobo and the Odukpami in Calabar. Those are very important assets of the federal government. And it's not the federal government alone. From the concept of NIPP, which was like an SPV of the Obasanjo administration to hold those assets, those power assets, they were funds that ought to have been shared by the 3 levels of government, the federal, the state, and local government. So the NIPP is owned by the federal government, by the state and local government. So these assets that we're talking about are assets of the federal government, the state government, and local government. So in selling them off, we need to get the best deal as much as possible. We shouldn't be in a hurry to sell off those assets. Definitely the country needs megawatts, and we need prudent, technically sound investors to put in the money around those assets so that Nigerians can benefit from it. But that wouldn't warrant selling them off at just giving prices. But when we go into the details of privatization, not just of power assets, of any asset whatsoever, is detailed. The procedure is detailed. The requirement is detailed. Of course, we must first carry out the DD. This is called due diligence. Due diligence is not something that is in the newspapers. These are where you display all the sensitive records of the asset to be sold or privatized. Then you call for bids. The investors will look at it and bid, and the bidding is confidential. So now I'm not going to say we're going to get $1.5 billion from it. Of course, there is the reserve prices, and there is the actual. So if federal government is offering those assets, for instance, like $200 million, a prudent investor after the DD may come to the conclusion that the asset is worth much more and may be willing to offer more. Of course, because of the nature of privatization, of bidding, so to speak. So if a player is offering $200 million, another one may attempt to outsmart and offer 250. Another one may outsmart by offering 300. So that's the essence of bidding. It has to be competitive. The process and the procedure is rigorous. One thing we need to be careful so that we don't go the way of the discourse.
All right,
we need
Prof.
to be very careful because we need to be sure those offering to buy those assets have what it takes in terms of financial capability and the technical wherewithal to run it.
All right, Prof, but it doesn't seem like we can get the government to change its mind. What powers do we have? Thank God you are also a lawyer. I mean, you are sound in electricity law. What rights do the people have? We've had this news for some days now. We've even tried to reach out to the BPE to get them to update us and tell us what's going on. That's not working. They just keep promising they will come back to us. We haven't seen that. So at the end of the day, we are just talking. At the end of the day, we will hear that these plants have already been sold. And then we get back into, as you have said, the same scenario with the discos.
Well, we have powers as a people, and we can speak up. And though I do more of advisory and technical involvement now. If some of us who are serious players in this industry, if we feel otherwise that those assets have not been properly privatized or they've been sold at giveaway prices, I can assure you we're going to challenge the sale. And we're going to seek the court to set it aside. It's our asset, our collective asset, and we're Nigerians. Nobody should be afraid of speaking up or standing in the gap for the integrity of the system, for the betterment of Nigeria. As we say jokingly, that Nigeria must succeed by fire by force this time around. Under the current time, so we don't have the country is a country in a hurry for development now. If there is any reason or basis for assuming or for concluding that the sale, well, it's still speculation anyway. I'm not going to say the sale, the rumored sale has not been justly implemented or carried out. Nigerians would have a right to seek redress. And I can assure you we have enough organizations that can, in the power sector, that can go to court and challenge the sales or take certain steps. We've had several cases before. Some won, some lost. We don't want to start putting that in the media now. But then there are organizations, consensus Nigerians, who wish their country well, massive, inclusive, and we can challenge this.
All right, so
irrespective of the beneficiary.
Assuming that the sale,
I would think there should be no reason for that anyway.
All right.
Because I want to assume everything should be done properly. Because we've seen the names of those who are bidding, and we have cause to believe they are Nigerians, serious-minded Nigerians who will probably put in their best. They have names out there. They have a reputation that stands them out, and I want to hope we shouldn't privatize in a hurry, but we should get the best of deal if we have to.
So what can Nigerians expect if and when, or maybe I just stick with if, this sale goes through? What can Nigerians expect, especially when it comes to supply?
Nigerians, of course, no investor will put in his or her funds and allow it to go down the drain. I will expect, as a Nigerian myself, I will expect that the new investors will reject those entities. It's not enough to raise funds to acquire an asset. Of course, we can always have access to acquisition financing, which was a challenge we had with those dispos. Some entities raised money to buy those entities, and then they had no resources to revamp it, to rejig it so that it will get to perform at optimal level. But I want to assume that won't be the same thing in respect of these 5 assets that we are talking about now. Geregu is huge. Omotosho, Olorunshogo, Biniho, Irobo, and Odukwami, these are vital assets that could gross in up to 2,000 or more megawatts of electricity in Nigeria, and that's a lot. That's a lot compared to the 4,000 plus that we are struggling to have now. So investors putting in huge funds to acquire this asset, of course, would not want their money to go down the drain. They would also need to look for more capital to now run it properly. And we expect Nigerians now, of course, once we begin to have access to those supplies, of course, to pay for electricity consumed and not
exactly.
That's also the challenge on the side of consumers. I've always argued that it is criminal to consume electricity and not pay. It is also illegal to force Nigerians to pay for electricity. So in between those extremes, we need to strike a good balance, because the investors now, once they invested and they start to put out the megawatts for Nigerians should be ready to pay for those megawatts, and of course, so that we can start to grow our country. Yeah, but I'm optimistic anyway. I'm very optimistic.
So, Prof, that That reminds me that the discos still call for a cost-reflective tariff, you know, and on the other hand, we have talks of a subsidy in the electricity sector, you know. So as I said, Nigerians are waiting to get supply before they, you know, they want to pay or want to pay more than what they are paying. While on the other hand, the operators are saying, we do need this fund to even give you supply. So it seems like a very delicate balance that we don't know where to start from. If these new investors come on board, they will need funds, obviously, apart from coming on board, they also need the tariff to reflect their cost of operation.
Look, I don't want to sound like a prophet of doom. Of course, power is not cheap anywhere in the world. What we have been advocating is we should have supplies and we give Nigerians the benefit of options to manage their consumption levels. Of course, that's why we talked about extensive metering system. If we are going to increase the cost unit of electricity, you are saying, oh, I'm going to pay more, then I should be able to decide for myself whether I can afford 2 hours of consumption per day or 10 hours. And that will only be possible if I'm duly metered. I may decide to put myself in darkness for 23 hours and use it for 1 hour to hire my truck to go to work or to, of course, set myself, put on my fan to sleep for an hour or thereabouts. So Nigerians should be able to control their consumption pattern on levels. If they are going to jack up tariffs, that's not a problem. So that will happen. Then I have strongly advocated that there is too much subsidy in the overall in the energy sector. When we talk of energy sector, we're talking of gas, we're talking of petroleum sector, we're talking of the power sector. There is too much subsidy from the federal government in the energy sector. We just resell out of the subsidy in the petroleum sector when with the coming on board of the additional President Bola Ahmed Tinubu, when subsidy was removed from the petroleum. But Nigerians are not aware. A lot of Nigerians are not aware that there's huge subsidy in the power sector. The power sector subsidy is humongous and it's not acceptable. Because the subsidy regime in the power sector is also not as transparent as what one would have expected. And I blame the regulator who's in charge of that. Because power sector is heavily subsidized. And government is also heavily investing in the power sector. On papers, the power sector has been privatized. Then we are spending much more. It doesn't make sense to me as a player, as a stakeholder in the sector. It doesn't make sense to any government. It doesn't make sense in any mathematics. It doesn't make sense in anybody's economics. So we need to start to think seriously about how to undo or stem the tide of wasteful subsidies in the power sector. So when these assets are sold, I'm strongly in support of the sale of those assets. I can't speak for government as to the timing, but I would rather delay it to the end of the year or early next year. But if it's good to go now, that's not a problem, provided we're maximizing the gains of our investment as a country from it.
All right, but Prof.
The subsidy in the power sector should be reduced, and we should encourage more investment in the power sector the way we are going, so that Nigeria will start to have megawatts, but Nigerians also should be prepared to pay for more. Cost-reflective tariff, I don't support the cost-reflective tariff. You raised that important point, and I just want to say something on it for 1 minute, if you allow me. When you talk of cost-reflective tariff, you are saying the discos should be able to reflect the cost of production of those megawatts, which is wrong. One, the costs are humongous. They need to also manage their CapEx and the cost of those things. I don't want to go into the details of it's and T losses and all those things that come into the mathematics of the actual amount those megawatts are sold. We now talk of service-based tariff, meaning I don't want to bother about your cost. You might not have been efficient in your cost, but I want to talk about service, the actual service you are providing for me. I want to pay for it. And that's why we're talking about service-based tariff as against cost-reflective tariff.
All right.
Cost is your own cost. You need to manage your cost because some of those discounts are not sufficiently effectively managing their cost. So that's why we are changing the narrative
to
for
service-based reflective.
Yes.
All right, thank you so much, Prof. But I know at the mention of removal of subsidy again, a lot of Nigerians will be on your throat.
Not now. I think
okay,
the
not
government
now.
is very sensitive.
Exactly, yeah.
I mean, once we have the megawatts coming, honestly, Nigerians are willing to pay for electricity if they have it.
All right, Prof.
What we don't want to pay for is darkness. Nigerians can't continue to pay for darkness. That's what we're saying. But I'm sure if you have the megawatts, who pay because it's still cheaper than running on diesel and petrol.
All right, Prof. Professor Yemi, okay, thank you so much for those insights. Professor of Energy and Electricity Law, thank you.
Thanks for having me. And have a good day.
You too. All right, now let's head to the markets now. Anyetie is standing by with intraday numbers. I know that yesterday I reported the market.
Friday,
Thank God it's Friday.
Well, I think it's becoming more of a cliche, a positive cliche that Nigerian stock market is getting, having newer highs. And as a matter of fact, it has gone beyond the regular understanding of many market participants.
So do you think it's a relief that we see, even if it's a small red? It's marginal, but do you think it's a relief? Because a normal cycle in the market is, there are gains and then there's profit taking and then we start again. And, but this market has just been going ballooning, since last year.
Well, if you look at this week for U.S. markets, of course, I'll be giving you details about that, and of course, our Washington correspondent will also give us that. But the market it always has this rise and fall.
Exactly.
But when it continues to rise, it brings to mind some question. That's what's happening. But of course, our trader will be giving us details of that. But first, let's take a look at the Africa markets, most major African markets, starting with Nigerian markets. Yes, of course, we reached another high, 102,000 points. I think now we're beginning to have a new level for the market, and then a new outlook. Maybe we're going to see the number going beyond this 100,000 points to possibly 150 or 200,000 points. But of course, our guest will be giving us more details about that. But as at intraday, we saw the market made us a pullback from the 100,000 and 102,000, which it closed at on Thursday, but then carrying over into Friday. So for the other markets, of course, for Nigerian stock markets, so far, 36.61% year to date for that market. Let's look at the South Africa's market. It was in the green, 0.09%, but it was a mixture for Nigeria, for the Africa market. Take a look at the other side of the market. For Egypt's stock market, it's more than a 0.25% increase, while for the Kenya stock market, it closed Thursday in the red, down by 0.11%. Now, we're talking about Nigeria's stock market, of course, which has been most likely, you might call it a January to remember, because about 6 days from now, we'll be saying goodbye to January. And then so far, the market has gained more than, I should say, about 80% of what the entirety of journey of 2023. So now let's talk to Richard Akimoladu, an equity trader at CSL Securities. Give us details about what's happening at the market as we speak. Thank you for joining us, Richard.
Good afternoon, Anita. Thank you for having me on your program this afternoon.
Okay, so now we've seen billionaires are getting more billions out of the likes of Otedola, the likes of Abdul Samad Rabiu, the likes of Dangote, and so many others, even down to the people at the investors at the lower rung. But what are the market movers as we speak this time? Particularly when you look at earnings, we've seen earnings from Guinness, we've seen earnings of the UBA board approving the full year 2023 audited financials, and then of course, cement sector in focus. Tell us what's happening at the market at the moment.
Okay, so currently the market is slightly up by about 10 basis points. We've seen profit booking in the market lately, especially today. You look at the Guinness chart, what we are seeing there are just the penny stock that are topping the chart today. we've seen profit booking across all sectors. Even value traded for today is a little bit down compared to what we used to see for the past 2 weeks. So we've seen a sort of profit booking happening in the market as of now.
Hello, Richard, can you hear me?
Yes, I can hear you.
Okay. You talked about profit booking. Now, we've seen the market at about, I'm talking about the all-share index now. We've been talking about this. It's gone beyond many of the understanding of the market, particularly in the month of January. We're still very much 3 weeks in the new year. But are we likely to see this new feat of the market to continue into even the end of the first quarter of this year? Tell us more about this.
So we've seen the market starting the year on a very, very bullish note, in expectation of some of earnings for audited earnings for most of the listed entities. We've seen most of the names like recording new prices. But we, as we mentioned, we are beginning to see some of the earnings coming to the market. We've seen Q3 from Guinness. We've seen a Q2 from Guinness. We've seen FCMB releasing their result this afternoon. And as we move into the week, we'll be seeing more results being released into the market. And these will going to shape the market going forward, especially dividend news as they come into the market. So this new price we are seeing, if the dividend are like good enough, we might see the rally continue. But if not, if the dividend cannot support this new price we are seeing, we might see a lot of sell down in some of these names that we have witnessed a significant gain year to date.
Okay, Richard, of course, with the market is just about an hour from closing for Friday's trading session. So I think we'll rest with this analysis of yours and keep our eyes on the market's close for Friday. So thank you so much for your time on our show. Richard Akimoladu, equity trader at CSL Securities with the market at the NGX. Now, take a look at your board there for the Middle East stocks, the GCC stocks. They were mostly in the red. Unfortunately, we saw that pullback, no thanks to profit taking for the Arab world's second largest stock market, which is the Abu Dhabi index. It was down by more than 0.5%. Its twin, the Dubai FM, was also down by 0.42%. On the other side of the market, the Arab world's biggest market, which is the Saudi Arabia's Tadawul, it was in the red also, no thanks to profit taking from the side of investors, and then also for the Egyptian, the Qatari stock market, it was also down, no thanks to profit taking. Now, talking about the world's biggest economy, the stock futures for U.S. stock market, it was it opened negative after recording steady gains on Thursday, and that's because the Intel, the world's largest chip maker, it's issued an outlook that fell short of Wall Street expectations. And then futures linked to the tech-heavy NASDAQ, it was down by 0.71%. If you can see on your board there, the S&P futures, it dropped by 0.37%, while the Dow Jones Industrial Average slipped by 0.30%. So now, at the same time, Wall Street will be awaiting some company earnings on Friday, which is today, which include Colgate-Palmolive, American Express, and Norfolk Southern. So now for a review of Thursday's trading session for Wall Street, we have our Washington correspondent, Maria Bird, with some details of the market's performance at the close of Thursday's trading session.
The U.S. stock market was on an uptick on Thursday as the Dow Jones was up at 0.6%, the S&P 500 up at 0.5%, and the heavy tech NASDAQ up at 0.2%. The S&P 500 had another record-setting day. Many investors were surprised to see the strength in the stock market despite Tesla's downward trend, as the EV company is showing some challenges as they expected that there will be a slowing down of production of vehicles. It is also clear that many are excited to see the GDP growth. Economists expected a 2% growth, but it showed over 3.3%. This has many more confident in the U.S. economy than they were just a few weeks ago. As the stock market continues to show growth, many investors are hopeful that this means a strong ending to the first month of 2024.
Okay, so that was our Washington correspondent Maria Bird giving us details of Thursday's trading for the U.S. stock market. And then still with the U.S. stock market, but this time on the economy. On Thursday, the GDP's growth, the world's biggest economy's GDP growth, which is an indicator of economic performance, it was up by 3.3% in the final 3 months of 2023. And that, of course, is against, it beat the market's estimate for a growth of 2.2%. And then at the same time, it was also what you might call a stronger performance for the GDP growth, of course, which will also affect the sentiments around the world, particularly when you look at inflation and then the growth of the world's biggest economy. So now a member of the U.S. Economic Advisors Council, a member of the Council of Economic Advisors for the United States government, Clement Jackson, he would shed more light on the world's biggest economy's surprise growth in the final quarter of 2023.
The latest report that came out this morning showed that in the fourth quarter of 2023, GDP increased by 3.3%. So that allows us to see what the overall growth was for the year. So over the year, we had GDP growth, and this is real GDP growth above and beyond inflation of 3.1%. So this is a strong number. And just by way of context, this is sort of comparable to the kinds of growth that we saw in 2019 before the pandemic, and actually above the long run trend that we saw between 2011 and 2019. So this is a strong number in terms of GDP growth. If you look under the hood a little bit, you see that a lot of this is driven by strong consumer spending. A lot of that is undergirded by a strong labor market. We've had very, very low unemployment in the past 2 years. The lowest unemployment we've had, longest stretch of unemployment below 4% in 50 years. This is basically generated better consumption, stronger consumption, which is generating these gains mainly for the economy. So I think overall, what we're seeing is a strong economic growth. This is also in conjunction with the fact that we've seen overall inflation, core PCE inflation came in smack dab on where the goal is for the Fed. So basically, we're looking a lot like what things looked like before the pandemic in 2019. And I think the United States is one of the few countries, and maybe the only country to have done this among sort of developed nations.
So, okay, right. So that was Clement Jackson, a member of the U.S. Council of Economic Advisors, talking about the U.S. Fourth quarter growth in 2023, which came in quite as a surprise because they were expecting a pullback, but instead, surprise, surprise, it was at 3.3%.
I look forward to such surprises in Nigerianity. Thank you so much.
Pleasure.
All right, now, let's head to Europe now, where an online retailer, Temu, was making the news. They're expanding their presence in the United States and European Union. The fast fashion app is heavily marketed on social media, and the latest Chinese-owned app is claiming to deliver the cheapest prices to consumers. We have Cassandra now from DW to tell us details of this. Hi, Cassandra.
Thanks for having me, Annie. Yes, if you're wondering how popular Temu is, the answer is very. It was the most downloaded free app in 2023. Now, this proves to be a meteoric rise for the e-commerce platform, which only just launched 2 years ago. The company is based in Boston in the U.S., but owned by a Chinese parent company. Now, this expansion that you mentioned will allow U.S. and European sellers onto the platform. Currently, the research for Marketplace Pulse estimates that Temu has more than 100,000 merchants based in China. The whole selling point of the app is that factories can act as merchants to sell goods on the platform. The factories can then sell their products to Temu warehouses in China, which are then delivered directly to consumers in the US and many, many other countries. Now, this business model also relies on the exploitation of some trade loopholes. For example, for US trade, there's a rule that says that if an imported package is valued under $800, the importer can bypass duties and generally receives less oversight from customs officials. But of all the packages that ship to the U.S. under this customs limit every day, new numbers show 30% of them are from Temu or its fast fashion rival Shein.
All right, so let's look at the market now, see if this popularity also reflects in the market. How are they doing?
Right. Well, that rally in Asian markets this week petered out a bit today on Friday. In Hong Kong, traders are looking out for more guidance on China's plan to support that country's battered economy. But on the whole, Hong Kong saw an 8% surge from Tuesday to Thursday, and Shanghai saw 5% growth during that same period. All on the news that Alibaba's co-founders have bought huge stakes in the firm and pledges from Beijing to shore up markets and introduce new economic support measures. Now, some key data that traders will look out for later today will be the so-called Personal Consumption Expenditures Index out of the U.S. That is essentially the Federal Reserve's preferred gauge of inflation, and it really could be some tea leaves for traders with a keen interest in the central bank's future interest rates decisions.
Cassandra, thank you so much for that, and we wish Timu and the others the very best. Well, let's switch gears now and see what's going on in Nigeria for 2023. Atlas Magazine ranked Nigeria's insurance industry as still in a dormant stage with less than 1% penetration. The country has also been ranked the fifth insurance market in Africa by turnover in 2021 with 2.1% as of today. Well, there are 610 different types of insurance companies in Nigeria. I wonder what they're doing when we only have 1% penetration in the country. Well, research lead at Intel Point they released an industry evaluation for the insurance industry. Thank you so much, Sayinka Wasonya, for your time. I mean, we know that in Nigeria, everybody's compelled to get at least the third-party motor. But I think even with that, there are numbers that just about 12 million cars on the Nigerian road, in spite of it being compulsory.
Yeah, 3.something of that is insured according to the last figure. So it's still not, the enforcement is still not there. Yes, you are compelled, you are mandated to have at least a third-party insurance to drive on Nigerian roads, but then it's still not there. So 5,000 thereabouts when it was increased recently.
And now it's more than 100% more than what it used to be. That was early last year.
Yeah.
Yeah. So why does it seem like insurance is a hard sale? Isn't it useful? I know it came in really handy during the Lekki toll gate. NSAS thing, not just at Lekki, all over Nigeria.
I wouldn't say it came handy. And the reason why I won't say that is, yes, so after the 2020 event, so there's a little bit of spike in the premium for insurance. So more people bought. So it was the effect of that made people buy. So it's a case of, yes, something happened. Just if I had insured myself before this, I won't be in this, so let me now do it.
So maybe the stakeholders in the insurance industry are not telling people the usefulness of insurance.
So there is that. There's also so the insurance companies that we spoke with say at any point in time they have campaigns running on telling people the importance of insurance for businesses, for people. But then you talk to the business owners, it's a case of they don't know. One of the major challenges for them for not getting insurance is they don't know how to start. So it all bother exactly all bother education, and not education in the sense of formal education of what to do, how to do it, enlightenment, things to do, and how they should go about it.
Well, so that's kind of hard.
Yeah,
how to go about insurance. I'm sure if you go online, you get a lot of numbers. You walk into some of those offices, companies, you can easily talk to them. So I think people are just
there's also the cultural and social. So you approach someone to buy an insurance, and next thing the person is probably telling you is, God forbid, bad thing. Insurance is just to protect you against if anything bad happens, to make you whole.
But don't you think that also the trouble of getting compensation is a discouraging factor? So a lot of people buy the third party, for instance, because they're compelled to, but you hardly use it. Even when people are involved in accident, they don't even remember, to call on that.
It all boils down to education, as I said earlier. And so this is it. You go around the way, you see two cars running into each other. And the next thing they are doing is shouting and fighting. when at least they have third party. And what you just do is just call up your insurance company. Oh, yes, I fit someone. And if it's comprehensive, they make you and the person hit whole. And if it's third party, they make the other person whole. And everybody's, but the next thing they are doing is fighting.
But for investors, at the NGX, we've seen insurance companies pick up these days. I know it's a good market now, so it's spread there. Do you think investors are looking that way?
Not really. So the premium over the years has grown tremendously, at least from around 200 billion in 2010 to 700 billion in 2020. So it has grown. So I believe definitely it will get to the point whereby more people will believe in the insurance industry, as well as both from the business part as well as from the investors' standpoint.
So now that the NGX is booming, what do you see? What's your outlook for the insurance? Let's start from the market. They will now talk about, businesses and individuals insurance. Let's start from the equities market, for instance. Do you see insurance stocks getting more attention?
I wouldn't say. Because it's tricky, because it all boils down to what these insurance companies are doing. So that's what determines their performance in the stock market.
And that's what would attract or not attract investors.
So it all boils down to what these insurance companies are doing, the steps they are taking to gain more relevance in the market, to provide what they're supposed to provide, that increase confidence. And then with confidence, of course, investors will to park their money.
Okay, so if you see more Nigerians, for instance, buying the security, then we see a boom in business, then of course it will attract more investors. Do you see that happening? Is there anything you think can shift it? We don't want NSAS anymore. We don't NSAS do that.
So we don't want something like NSAS anymore. But then it's a case of awareness. So if there is increase in awareness, which affects the business these guys are doing, trickles down, that means so they do more business, they get more profit. So that trickles down to the increasing interest of the investors in this insurance company, and attract more funds into them, and investors will believe more in them.
All right. Thank you so much, Sayinka Awosoya, research lead at Intel Point.
Thank you.
All right, now let's head to Ghana, where the president, Nana Akufo-Addo, has announced that entrance visa requirements for all Africans will be removed by the end of this year, 2024, ensuring visa-free travels to the West African country. The implementation of a visa-free policy will be one of the last laws Mr. Akufo-Addo promulgates before he leaves office on the 7th of January 7, 2025. Ghana is about to implement this policy to grant visa-free entry to all Africans visiting the country by the end of this year. The gesture is in line with the objectives of the African Continental Free Trade Area, that's after to create a seamless single market on the continent to drive economic growth, job creation, and poverty eradication. The Africa Prosperity Dialogue, organized by AFTA Secretariat and the African Prosperity Network, a think tank, serves as an annual platform for Africa's leadership to engage, forge partnerships, and commit to achieving the African Union's agenda of 2063. All right, now let's talk the numbers. As my director tells me, we head to the crypto market and see how that is doing at this time, or about this time. The numbers we have there were taken just about 30 minutes ago. So we have Bitcoin in the news, in the green, and a lot of talks about Bitcoin that may not be so good. So we see it's up marginally 0.07%, but we do see that it's more greens right here. Ethereum is also marginally up at $2,211.48. Doge, XRP, more greens, a little bit of recovery we see there. But Bitcoin, we've seen it do better than this. Let's see the other slides and see what's happening there. It's neutral, neither here nor there. I wonder which way to head to this weekend. We just have to wait and see. Let's see the prices just before we get Solomon Amunde to tell us about this news that I'm hearing about Bitcoin. So there you have Bitcoin already. You have Ethereum. BNB also gained. Cardano 0.11, XRP 0.21. I believe we have Solomon. Hi, Solomon. Good afternoon.
Good afternoon, Amy.
Yeah, Solomon, I heard that Bitcoin is going to go below 20,000. How true is that?
Well, those are still speculations. So far, so good. There's nothing backing that speculation up. The most we're expecting towards the downside is around $25,000. And that's majorly because that was the price where the whole ETF hype started last year. So if there should be any correction after this whole euphoria of ETF, we should be seeing Bitcoin correct back to around $25,000, which is where we have the strongest so far.
So when do you think is this the period for the correction? Because it's been doing 39, 40 for about a week now.
I don't see the correction happening January or February. I'm expecting it to happen towards the end of the first quarter and into the beginning of the second quarter of this year. So that's when I'm expecting a correction. And we should see a huge fall to about 30K. And if we're able to hold $30,000, then obviously we'll be going to $25,000.
And then we had such great expectations for Bitcoin in this year, but I guess it's still early yet because this is the year for halving and all of that. But do you see this period, this pullback period, as a good time for maybe some investors to get on board?
Yeah, for investors that want to get Bitcoin, they need to have a little bit of patience. This year is going to be a fantastic and amazing year for Bitcoin. Looking at the upside, we should be able to tap into about $60,000, but that wouldn't be happening in the first half of this year. I'm looking at that happening towards the end of the second half of the year. So investors that want to purchase right now, they need a bit more patience and wait to see Bitcoin around between $25,000 and $32,000. That would be like a fair range where they can begin to DCA.
All right, investors who are interested, we have to be a bit patient to get in and patient to take profit. But there's this SEC pushing back on BlackRock Spot FI ETF. What's that about?
Yeah, so after the Bitcoin ETF was approved, we have some companies, Grayscale, BlackRock, and a few other companies pushing for the Ethereum ETF. And so far, so good. The SEC has some issues. There are a bit of gray areas that they have to sort out before they approve the Ethereum ETF. And they didn't give them the go-ahead after the last meeting. I think they'll be meeting again around May, June this year. Now, that would also bring in some hype into the market, looking into second half of the year, talking about speculations of the Ethereum ETF. So we should also see some good price movement from Ethereum towards the second half of the year.
All right. So what do we expect this weekend? We're still in the neutral mood until Monday.
Yeah, obviously, Bitcoin is still holding at $38,000. Right now, we're slightly above $40,000. That 8K support has been very solid, and all we need to do is hold. I don't see it breaking below 38K this weekend, and even this month. I believe that support would hold till next month. So I would say this month, traders should be looking at altcoins that have good price action, and they can make some good gains, 10, 20, 30% over the weekend.
All right. Well, it's time for investors to consult their consultants, their market advisors for that. Yeah. Thank you so much, Solomon, for your perspective this afternoon. Have a great weekend.
Thank you very much, Ini.
All right. Just before we close the curtain, can we have more of those numbers there? You have the top gainers for this afternoon: AKT, OKB, OP, I think Optimism, and then CFX and Chili's. Well, not double-digit gains, but at least you have some good gains right there that you could hold on to. And the top losers, Mantra is one of those, and BSV all down and not very deep right there. So I mean, it's a fair market. That's why the sentiment is neutral for now. But that's where we draw the curtains. And hopefully by Monday, we'll have made up our mind, or investors would have made up their minds, on which way they want the market to be, and not just neutral, neither here nor there. But you heard that from our analyst, Solomon Amunde, about what direction you could expect Bitcoin to go to by the first 2 months of this year. Well, that's it on Business Incorporated. 55 minutes of giving you loads of information from the world of business and where you could put your money or not. Ladi Williams will be back tomorrow. Capital Markets, 7 p.m. That will focus on markets. Another good program for you to see where you should put your money or not. I'll be back at 10 p.m. for the Stock Market Report. I'm Mini John Mekwa. I'll see you later.